Hello, guys. How are you today? A very good morning to you all. This is our first live together. Um, we are going to do from now on every morning the gold live market analysis, okay, as per the technique that we know how to work with, which is the technique that we study. As you can see, from my chart here, we work pretty much with a clean screen. So I don't have SMAs and I don't have a lot of indicators here on my screen. So basically, we have some indications, some indicators of 50%, which pretty much the market, you see how it works, but the market will work basically from a high, a low, and a 50% region, okay? So normally it will always correct itself around the 50% region. Once it hits a new high, it should retract and come to check that 50 region again, okay? So the retracement of the market is always around 50%. So Fibonacci is always going to be set up as a low, a high, and a 50% mark. Okay, so it's very, very good to be here. This is a new project that I envisioned for about a year. I wanted to bring this technique out to you guys um, who traded Forex and CFDs and indexes out there in the world. This technique, I haven't seen anybody use it. A school that I work with, we have validated the strategy that we work with as well, which is really good. So at the moment, let's talk a little bit about gold, and with time, I'll be going through and explaining to you guys exactly how everything else works. Okay, so basically, what we do is we do a candle by candle analysis of the live market. Okay, so instead of using indicators, we will use a candle by candle reading, which is really awesome. Once you get the feeling of it and you know exactly how it works, you see that you do not need to rely on indicators anymore, because indicators, they are a indication after the price has done what it has to do. And when we doing these trades and we're reading the market, we try to read the price action instead. Okay. This is my first live again, so be patient with me. On the following weeks, it should be a lot easier for me to come through and give you all of these classes. Okay, so not very used to working with YouTube. Actually, took me a little while to get this live set up, and I hope that it's working well. I hope that it works really well. So there's a lot for me to learn through on how to broadcast and how to do all of these things together with you guys on the next few weeks. Okay. Okay. So first of all, let's have a look at what the gold is doing right now. I'll clear this chart so you guys can have a look with me. We do know that. Let me just clear this out. Chart, delete all. We do work with the MT5 MetaTrader, okay, 5 for our trades here. And we do use another platform which is called the Black Arrow, but you can also be using TradingView. A lot of traders like to use TradingView. Black Arrow is a really good platform. To tell you the truth, it's really awesome, but it's not well known worldwide. Nelogica has got a um, a platform here for Brazil, that's called Profit, and they just designed these other platform. Let me drag this down here because you can't see what I'm doing. They just created this other platform which is called the Black Arrow, just to work with Forex and CFDs and things internationally. And it's awesome. It's really cool. I'll be introducing that to you guys later on. But for now, we will work with our MetaTrader, okay? So this is my live account, all right? So this is not a demo account. As you can see, I always trade on my live accounts, all right? So I'm not like some of these guys around that will be trying to teach you on demo accounts. It's very, very easy when you trade your demo account, because if it goes bad, you do a bad trade. People don't really care. The market will always, have their way of doing things, but I like to work through my live account to show you guys that what we're actually doing is for real, okay? And I do that with all my students as well. I mentor quite a lot of people through the school that I work with, which is called LTX Academy. I spoke to you. I actually made a video yesterday talking a little bit about that, but through the following weeks, we are going to go through and get a lot more information out. So, a quick read through the daily chart here on the daily time frame. What we have at the moment is we have a ascending trend line. Okay, so we have a bullish move here from gold. It has broken through the last high, which was the last high had was at this point. Okay, we do have this region here, which is a region of interest for the price. Okay, sometimes I'll be looking at other screens. All right, I do have many screens here to look at as I do trade other assets as well. So in here, region of interest, this was a resistance for the price. Price had to come down quite a bit to correct itself a little bit and grab some liquidity and also create liquidity in this region here, okay? So it could come and stop all these guys afterwards. So it stopped the sellers once the price came up and grabbed all this liquidity that it created. Price also left a fair value gap here, which was really good. It came and got through that, got all that liquidity that was left in there. Took a little bit, took about 3 days to break through this resistance that it had created, but right now it has gone up and has gone through the target and broke through the trigger candle. Okay, I'll explain to you guys what a trigger candle is. Trigger candle is a candle that is the last breaking point for the price. Okay, so this here is the last point, resistance point for the price as the price is going up. This is why we call it the trigger candle. So if I put a line here, every time price, sorry, every time the price comes through this region here, you see that it's gonna get a little bit of a hard time to go through that because the sellers are trying to protect the liquidity and their stop loss that's in there. So when it hits the last breaking point, it manages to push the price a little bit lower. Now, when prices break through the last breaking point, that indicates that the price is going to go over through the last high again, okay? So we are waiting since this candle did what it had to do here and it broke through. this last breaking point. Right now, we do have a target on the region of the last maximum high, which is the region of the 4549.94. One little thing is happening right now, at least here on the daily chart. We can see basically we have an interest, region of interest of price. We did have these stops here, which don't really, hang on, let me do this, just unselect that. And so that liquidity is no longer there. Right now, we do have a lot of buyers liquidity down here. Okay. And we've got sellers liquidity up there, which is pretty much their stop. So let's have a look at where the price is against our Fibonacci here. So price can still correct itself through this 50% region of the Fibonacci before it goes over to the last maximum, okay, the last high. Why? Because price needs to create more liquidity in this region. You do have a fair value gap that needs to be consumed by the buyers still. So you have all that region in there. From my candles are running without numbers, and would make it a lot easier if I had the numbers in here. Okay, there we go. So we have a lot of inefficient on these candle 256 still to be consumed. Okay, so we do have possibly a region of acceleration of price to reach the last maximum. Okay, so that may be coming through soon, but this price on candle 4 can still come around the 50% region before it goes over to that maximum. So we got to keep on looking at that. We got to keep on looking at that so we don't get into any bad trades. Now, as I said before on the first video, we are not allowed to be giving you guys live entry points here on YouTube. But through the readings of the market, you may get an idea on how to do it and where to do it. So I'll be giving you guys some pointers. We do have a arena that we trade with live with our students, okay? And I'll be giving you guys instructions on how to get into that a bit later on as well. Not today. Today we're just getting through these readings, the first readings. It's helping me through as well on how am I going to make these lives. Okay, as I said, I'm not very used to it, but I do know that we'll get through it really, really soon. All right, so on the 1 hour chart, what can we see here? We can see that the price came from this region here. Okay, so we have that last low and this last high. Price is working around that 50% region. Yesterday, last night on the Asian market opening, we made a short. I'm not sure if I actually loaded that on YouTube, but I can actually have a look later on and see if we did load that up. If not, I'm going to be putting that short into the YouTube so you guys can see it happening live. So we shorted the market here at candle 52 until the minimal, the lower on the minimal of the candle 59 here on the 15-minute chart. Okay, so we sold after the candle 9th here, got into that low. It still had to grab a bit more liquidity. um, until the low part of candle 59, which was a support because of these triggers here, these candle triggers on the left hand side. Okay, so price came there, it stopped over on those trigger candles and then corrected a bit more and came down to grab the liquidity on the bottom of candle 45. So that was our trade for yesterday. At night, I'll show you guys that one later on today. So at the moment, from what we studied here on the 1 hour chart, we do have these region of resistance for the price here. Okay, trigger candle number 51 held the price when candle 56 tried to go back up. So that is again, trigger candles is where the sellers, they protect their position. Okay, people who sold here would have put their stop loss on the top part. So once the price comes back up, this is the last breaking point for the price. The sellers will not let that go easy, so they sell more to push the price back down. So that's how it works. Okay, so you see that candle 56 got here to the trigger candle number 51, and then it got pushed back down. Candle 57 tried to break through. This candle 59 is also a trigger candle because it's the candle that protects the stop for the buyers who got stopped on candle number 60. Look at that, how that works. So candle 57 tries to reach the lower part, then trigger candle 54 holds the price there. 58 tries to go up again, is pushed down by the sellers. And this is also, we cannot forget, this is a, let me have a look. This is resistance on the daily chart here. Opa. Hang on. There we go. So it goes through these resistance. Price doesn't go back up. It's pushed down by candle 59. Once it's pushed down by candle 59 and it closes in this region, we know that candle number 60 has to come back to the minimal, to the lowest part, to the lowest price from candle 55. Why? Because this here is a pullback, right? Once it goes through the 50% mark of that movement there, which is minimum of candle 55 and the maximum of candle 56, we have the 50% region. Once it breaks through that and breaks through the trigger candle number 54, it confirms the pullback to the minimal of that last price. Okay, so it did what it had to do. Okay, number 60 did renew the lowest point, the lowest price of candle 54. That's the lowest price. So it did do what a pullback is supposed to do. So what does a pullback needs to do to make sure that it's a confirmed pullback? The pullback must renew or break through the last low or the last high. It really depends if it's a pullback to the low or if it's a bearish pullback or a bullish pullback. Okay, so here we have a pullback, a bearish pullback breaks through 50% mark. It tells you that it has to go through and at least renew the last minimal of that movement. Okay, so this is pretty easy. Actually, it takes a little bit of time to get used to it, but it's not difficult at all. Here we have our Fibonacci for our macro movement. So here is the region of 50% that we are saying that price can go through to that. Right now, Price is trying to correct itself here. You can see on the 1 minute chart that it's already broke through the trend line, okay, that bearish trend line that we have in the region. So that's already breaking through. And this here that you see on the 15-minute chart is a true three candle pattern, okay, which is pretty much a rejection pattern that happens on the chart every single day. The good thing about this three candle pattern is that it pays off 85% of the time. All right, so it's a rejection pattern. The movement is going, it's a bearish movement from the market, but then it gets into a region where it finds support and rejects that price, that bearish movement. Once it rejects, there are three rules to it. So the first one goes on target. The target in this case is this last minimal. The second one rejects the movement. Third one needs to test. Once it tests, we'll put our buying order here and our long, and we go long on this trade. Target would be the minimal of candle 47. That would be a first target. And second target would be candle 48 or trigger candle 40, okay? So you got a trigger candle here on number 48 and a trigger candle on candle 40. So this would be a really good target for a long trade if you wanted to take that trade. We didn't take that trade because, as I said before, we cannot give entry points here live to you guys. I don't know, I may do some trades on my account, but without giving any entry points because I cannot make that call. All right. So right now, we're still on our 1 hour chart. Price is rejecting the last low, the last minimal, and it's coming through that top. Once this candle closes, we'll change our Fibonacci because our Fibonacci needs to be on the last minimal. So the last minimal right now at this moment is candle 54. After candle 60 closes, if it closes the way it is, the last minimal will be on the minimal of candle 60. Let's have a look now. We already had a look at the 15-minute chart here on my other window. So people may ask me, Thiago, so why do you have three windows? Why do you have three charts open? Well, normally we will trade on the 5-minute chart, but we're always looking at the 1-minute chart to make sure that we've got the tendency of the market on the right path, all right? So sometimes the 5-minute chart will be showing you one thing, showing you that you should go long, but then on the 1-minute chart, as it's a lot quicker and tells you tendencies before the 5-minute chart, we use it to either get into good entry point or into long entry point or into short entry point. But this is where we keep on looking at what the price is doing, so we know that the trade is more likely to continue or if we should get out of it, okay, instead of holding it until the last minimal, the last movement, minimal of the movement. Right, so 15-minute chart, we have got last high for today, okay, so this is where the market opened last night, came down, already got all that liquidity that was in this bottom here, so that's already taken. I'll just unselect that and unselect this. I'll delete these here because that doesn't exist anymore, that liquidity there. Now we have got liquidity being created under the candle 54. So candle 54 has closed. And we have a great three candle pattern happening right now live. This is how you can check it. The first target for the three candle pattern, the first target is the maximum, the highest point of the first candle, which would be 53, but candle 54 already did that. The second target is 50% of the movement. 50% of the movement is pretty much where candle 55 hit just before, okay? So first target is the highest point of the first candle of the pattern. The second target is 50% of the movement. Third target would be the maximum of the movement. But of course, we have breaking points around the region. So it's always good to take your trade, take your gain before it actually hits those points. But you can also do partials, okay? So I don't know how many of you know how to do partials, but let's say that I got into this trade with 5 contracts, okay? And then I want to get some of that money and put it in my pocket. What I could do is I could always take 4 contracts out and then just leave 1 contract on the trade, which means that I would have 4 in my pocket. And if that 1 contract keeps on going, I'll still just make a bit more money. If it comes back, if rejects the movement that we're intending, at least you can put it on break even, and then you still made a good take with 4 contracts. All right. With time also, I'll be introducing to you guys the idea of we call it forward medium. All right. So it's when I'm in a, let's say I'm in a long trade, okay, and the price makes small pullbacks. Through those pullbacks, after the confirmation, we can put through a bit more contracts until the highest point of that pullback. It just gives you a bit more leverage in there and a little bit more profit on the same trade. So you're already on a long trade. The price is just coming to correct a little bit of the price. When it comes through to correct, what you do, you just get into another long trade, goes into the maximal point of that pullback, and then you take that trade out and just continue with your original trade. Depending on how the market um, draws out, okay? So depending on how it does, you can even extend that medium trade. But it's always good to put it on break even after the 5 minute candles break through the last one. So let's say I got into a trade on candle 55 here, or let's give this example. Let's say I got into a trade on candle 34. Candle 34 goes through and breaks through the trigger candle, which in this case is candle 29. After it breaks through that, and it goes candle 35 tests, okay, and continues the movement, I can put my trade into a break-even trade in here. So in case the price comes back down, I'm protected, okay, I didn't lose any money. And if it continues through, it will go through and pay me my take, okay, my profit, my take profit that I assumed that I put in a certain region, okay? So some people like to do long trades, some people like to do short trades. Everybody has got a different psychological point of mind. So some people will be able to hold trades for a very long time. Other people would like to do shorter trades, okay? Scalp trades, we call it. So if you're doing short scalps, um, I will always get out on the region of trigger candles because they always pay. All right. It's not every time that the market will go through the last high of the movement, but it will always come through the 50% region and the region of the trigger candles. So for our 15-minute chart, again, I hope I have been giving you guys quite a lot of information there on how we work and how we trade. We have the support right there. Let me, should be right there. Cool. So price can still come back down a little bit and test that support, but this is a region where buyers would normally appear anyways, because they want to protect the amount of liquidity that the market is still have in this region. Okay, so that's why every time it gets into support, it pushes the price back up. On the 15-minute chart, we have that support. We've got resistance here, where the price is working at the moment, which is this region here. If you have a look, price is trying really hard to go through, to pass through this region, which is a region of interest of the price. Let me change that color. Let's put a neutral color in it. So this is a really good region of interest. Price is trying to break through that 50%, but you have resistance on this region of the chart. Okay, so price may not go through there. It has already paid, the 3 candle pattern has already paid the second target of the pattern, which is the 50%. So that's already done. This price may come down a bit more and come down to that support to try out that price in there in the support region. So this may be only a pullback on the 50% region of this movement before it tries to go lower. All right. We do know that we have support in this region as well. Okay, so I have support just below here, candle, the body of the candle 33. Actually, I'm not gonna do this. I'll do this instead. So we have support in this region. Okay, so it's not a region that we want to be selling on. We could sell it before it hits that region, but we don't want to be selling on that region of support. Price may come through, but at the moment, it doesn't show as it will. We need to wait a little bit more for that, because price can continue, come through, break through that trigger candle, break through that 50, and then it will indicate that price will continue to come up higher. Let's go over to our 5-minute chart. So on our 5-minute chart, here we have another 3 candle pattern right there. So it came through the 50% point from the movement. First candle hit the target, which is the 50% region. Second candle rejects the movement. Third candle tries it out. Okay, so it tests the same region again and then comes down. So what we could say is the first target is the minimal of candle 163, okay? And that first target was paid by the candle 166. So you can see that that really works. It's really, really good when that 3 candle pattern works out. On the 15-minute chart here, you can see that candle 56 is actually just, it's just testing that region again. Price may come down and test the support once again. All right. We don't work with, I don't work with just buying at market price. Okay. So normally what we would do is we would put a position, a limit sell, stop limit position So let's say I want to sell there. I'll put a selling position behind that candle. Why? Because if I sell at market and the price goes up, I'm in a loss, right? So why do we wait for candles to test? Because if that candle 56 come here once again and test that price on that trigger candle 29 and comes back down, that means that it's rejecting that point, right? If it's rejecting that point, it's more likely to come and get into my selling trade and pay, sorry, pardon me, and pay me that selling that short trade on a target, which would be pretty much the minimal of the body of candle 33. Okay, so that would be a good trade, a good short trade right there. Because why wouldn't I take it until the lowest point of candle 54? Because it does have a support region in there. So why try so hard instead of just giving what we know that the market will give us? All right, so that's why. Right now, candle 166 tested again the 50% region. Sorry, guys. It's live, so it's a bit difficult, right? Things happen. Um, so it's testing that again. If it breaks through, it will show us that that's actually a pullback to continue this movement over a bit more to the high of this movement, which is the maximum point of candle 142. Okay, so it means that the price found support and grabbed through that liquidity that was down the bottom there. And then what we need to do, we need to take out that short trade position that we have in there right now. So I'm still waiting because the 15-minute chart indicated that price may come down again since candle 55 closed into the trigger of candle 54 and 53. That's why we left it there. But if this movement shows me that will continue to go high, we can close the position and open a buying position, a long position for a trade. One thing that I like to have a look, the same reading that we do here on the 5-minute chart is also the same reading that we go through to the 15-minute chart and also to the 5-minute chart. So it's pretty much the same reading through. The only difference is that every candle on the 5-minute chart has got 5 candles from the 1-minute chart. Same thing happens every 15-minute candle on the 15-minute chart has got 3 candles from the 5-minute chart. We do have the time here um, that indicates how long we still have to wait for that candle to close. All right, so at the moment, there's another 10 minutes to go before that candle closes. On the 5-minute chart, candle 166 didn't break through the 50% of our FIBO. All right, so there's no long trades to be done at this stage. If it had gone through, then we would have a continuance of the trade. Candle 167 does need to test down, all right? So he got into a region here where he found resistance. The price has found resistance there. Candle 830 should come here to the lowest point, to the highest point of candle 825 to indicate that's rejecting that movement, okay? To go back up. All right, let's see what's happening. So it's testing right now. We can't really go long because it hasn't broken through the 50% region. But let's see what happens. So it came already tested the trigger candle. Look at that, how it always works. It tested through. Once it touched it, it couldn't break through yet. It receives a buying push from buyers, okay? So buyers are pushing through because they don't want the price to come back down. And we're still waiting. If this had happened over the 50% region, then we could get into a long position, a trade in a long position there. Let's see, still finding resistance. It's really cool how you can actually read the market through without indicators, and you can do that on any chart, actually. Anything that has got candles on it can be read through, and it always work. So this is a very awesome technique for all traders to use, and we'll be teaching you guys how to do that on a daily basis. All right, so I'm waiting there for candle 167 to see how it's going to react to that region. It's a pretty funny region to trade with because we have got a region of interest of price. We have got a 50% region from the last movement, and it's quite a lot of stuff happening there. Let's see. So if it can't break through the resistance here on the 1 minute chart, so you can see that it's trying really hard to break through. Hang on, let's do this. Trying really hard to break through this trigger candle, but it hasn't managed to do so far. All right. Oh, hang on. Trigger candle is the 817. Ooh, look at that price coming back down. If you have a look at the 15-minute chart, you see that the sailors are pushing these trade down. Let's see. Let me just so I can show you guys how it works. Let me see if it allows me to do that. There you go. So if it gets into our trade in there, it is rejecting that 50% region again. Okay. So rejected twice. Let's see if it can break through that trigger candle and if we'll come down. So where would I put my take? My take will be around this region here. All right. My stop loss at this instance will be at the maximum of candle 164. But then you can tell me, oh, Tiago, but it's not a one by one, so it's not the same thing. If I get into that trade and it pays me, it'll pay me $425. If it goes up and gets my stop loss, I'll lose $715. It's fine. For me, it's fine, okay? I can actually trade with a lot more than that. I have a lot more equity than that to play with. So this is actually me being very reasonable on a trade. So coming back here on the 5-minute chart, you can see that candle 167 broke through the minimum of candle 166. Candle 168 is still has to test up, okay? So it must test this region here, which is the minimum of candle 166. If it finds resistance, it should continue on its way down. We do have the trigger candle here, candle 161, but I put this trade in on the 15-minute chart where price would have already have gone through, breakthrough the trigger candle 53. So I'm looking at two charts at once. Let's see how that plays out. If it plays out in our favor, that would be awesome. 1 minute candle 834 broke through the minimal of candle 833, and let's see, price is still comes down a bit more to pay us. Let me have a look if I already confirmed the pullback on the 5-minute chart. So it's into that 50% region right now. So it hasn't confirmed that pullback yet. So things still may get into a bullish movement, okay? So until the 50% of the region of 50%, it may still only be a pullback to come back up. If it goes back up, I'll close my trade before it hits my stop loss because I do have another region in there. I don't need to wait for it to touch my stop loss if it starts coming up and breaking through all the trigger candles, all right? Because that's an indication that price will continue to go up instead of down. So pretty good as it is at the moment. So you got $150 on this trade. Let's see. Candle 837 got into a region of trigger candles on the left-hand side, but candle 836 shows that we do have a bearish movement. It's still going on strong. Let's see if it will break through that 50% region on the 5-minute chart. Price must break through that to show us that it will continue to go down, okay? If it doesn't break through that and it closes above the 50%, I will put my stop loss on break even, and then if it takes me out, that's fine. But this, I'm just doing this so you guys can see on how the reading and the trading works on the 15-minute chart. Oh, you actually can't see my trade on how the trade is doing. So let me move this here, and you're going to be able to see right there. This is our trade at the moment. Let's come back here. So on the 1-minute chart, we can look at things as they're happening right now. We are stuck on that region of 50%. Okay. Price tried to go to our resistance point, which was the minimal of candle 825, and then it came back down. So at this point, it's still showing me a bearish movement. Okay. So it's doing pretty good as we go. We still have 1 minute for the live to go. I said I would be having this live every day from 9 to 10, but let's see if that pays us first, and then we'll close the live. And we'll have another live tomorrow at same time from 9 to 10 live with the gold, okay? Welcome to our trading cage, and this is where we beat the gold every day. There we go. Paid us $422 on let's go history. Oh, 444. Isn't that great? That's awesome. Now, price just confirmed the pullback to the minimal here. So this is a confirmed pullback. Candle 57 needs to test that region again now, and then continue its way down to the last minimal. It does need to renew to make sure that it does all the things that the pullback needs to do. So as you can see, we do have a region of support. It just paid us, and the price got pushed back up. Really good. I hope that you guys really enjoy this live, okay? I hope that you learned a little bit. This will be saved, will be kept here on YouTube. So you're going to have this here on YouTube. Also, you can follow me on Instagram. Let me just have a look at one thing and put the link in here. Where is my 2 seconds Instagram? Forgot to get my link. Let me get that link for you guys. Oh, look at that price go. So it's gonna test the trigger candle 55 now before it decides if it's gonna go down or up. Do, 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 do. Ba-do-ba-do. So my Instagram is Tiago Trader FX. So you guys feel free to follow me. I just put there on the chat, and I'll put that on the description of these live as well, so you guys can follow through. And I hope you enjoyed this. I hope you learned a little bit. Tomorrow we'll come through. We'll do the same thing, and throughout the next weeks and months and years, because I do want these to go through forever. So we'll be doing these lives every day, getting ready, getting our reading ready for the opening of the USA market. Okay. So if we do our readings through, get everything through, set up before the market opens. When it opens, we already know where our supports are, where our resistance are, what the price is doing so far, and where it needs to go, what sort of liquidity it will need to get. Um, and that will make our life a lot easier. All right. Well, thank you very much, and I'll see you tomorrow.